Hello, everyone, and welcome back. Today, we are dissecting Oracle's blockbuster Q3 fiscal year 2026 earnings report. This is a monumental quarter for the tech giant, driven by AI-driven hypergrowth and a massive expansion in its cloud infrastructure. We'll be looking at the 22% revenue surge, the incredible 84% growth in IaaS, and what their $90 billion FY2027 target means for investors. Before we dive into the data, please hit that like button and subscribe to the channel for more institutional-grade financial deep dives. Let's get started. Oracle has just released its financial results for the third quarter of fiscal year 2026, and the numbers are nothing short of exceptional. The headline results showcase a company that is successfully transitioning from a legacy software provider to a dominant force in the modern cloud and AI era. Total revenue for the quarter reached $17.2 billion, representing a robust 22% increase year over year in US dollar terms. This growth is significantly higher than historical averages for the company and reflects the intense demand for its technological solutions. The real standout, however, is the cloud revenue, which hit $8.9 billion, a staggering 44% growth rate. This segment now accounts for over half of Oracle's total revenue, signaling a major structural shift in its business model. This quarter marks a pivotal moment where Oracle's strategic investments in Gen 2 cloud infrastructure and its long-standing database expertise are converging to create a powerful growth engine. Investors are clearly responding to this momentum as the company demonstrates its ability to scale rapidly while maintaining high standards of service. This overview sets a highly bullish tone for the analysis to follow, as we explore how Oracle is capturing the AI revolution. Diving deeper into the revenue segments, we see a clear picture of Oracle's diverse but focused portfolio. The cloud segment, which includes both infrastructure as a service and software as a service, is now the primary driver of the business, bringing in $9 billion. This is followed by traditional software at $6 billion, while services and hardware each contribute about $1 billion. When we look at the year-over-year growth within the cloud, the numbers are even more impressive. IaaS revenue surged by a massive 84% to reach $4.9 billion. This highlights Oracle's successful challenge to the established hyperscalers as more enterprises choose its Gen 2 cloud for high-performance workloads. Meanwhile, SaaS revenue remains a strong and steady contributor, growing 13% to $4.0 billion. The stability of the SaaS business provides a high-margin recurring revenue base that supports the aggressive expansion of the infrastructure side. Overall, the total revenue of $17.2 billion, up 22%, proves that Oracle is not just keeping pace with the market, but is actively taking share in the most critical segments of the technology industry. The balance between hypergrowth infrastructure and stable software makes for a very compelling financial profile. The acceleration of Oracle's cloud growth is one of the most important trends in the tech sector right now. Looking at the growth rate over the last 7 quarters, we see a dramatic upward trajectory for IaaS, which nearly doubled year over year with its 84% growth rate in Q3. This is the fastest growing segment of the company and a testament to the superior performance and economics of Oracle Cloud Infrastructure. Oracle's SaaS offerings also continue to expand, with Fusion ERP up 17% and NetSuite ERP growing 14%. Perhaps the most surprising figure is the 531% surge in multi-cloud database revenue. This reflects Oracle's strategic decision to make its database services available on other major clouds like AWS and Azure, effectively meeting customers where they are. This multi-cloud strategy is unlocking massive new revenue streams that were previously untapped. With total cloud revenue reaching $8.9 billion and now representing 52% of total revenue, Oracle has officially become a cloud-first company. The acceleration we see here is not just a temporary spike. It is the result of a long-term strategy to provide the best infrastructure for the world's most demanding database and AI applications. Oracle's growth is not coming at the expense of profitability. In fact, the company is demonstrating significant operating leverage. For Q3 FY 2026, GAAP earnings per share came in at $1.27, up 24% year over year. On a non-GAAP basis, which often provides a clearer view of underlying operational performance, EPS reached $1.79, a 21% increase. Net income followed a similar path, with GAAP net income growing 27% to $3.7 billion and non-GAAP net income rising 23% to $5.2 billion. One of the most impressive metrics in this report is the non-GAAP operating margin, which stands at a healthy 43%. Maintaining such high margins while growing revenue at 22% is a rare feat in the technology industry. Total non-GAAP operating income hit $7.4 billion, up 19% from the previous year. These results show that management is executing with extreme efficiency, scaling the cloud business while carefully managing costs and maximizing the value of its legacy software and database assets. For investors, this combination of double-digit top-line growth and sector-leading margins is the ultimate sign of a high-quality, well-managed business. The most forward-looking indicator in this report is the remaining performance obligations, or RPO, which has reached a record-breaking $553 billion. This represents a monumental 325% increase year over year. To put this in perspective, Oracle added $29 billion to its backlog just since the last quarter. This massive surge is being driven primarily by large-scale AI contracts signed in Q3, as enterprises and AI startups lock in the long-term infrastructure capacity they need for training and inferencing. To support this demand, Oracle has implemented a unique GPU funding model where equipment is funded upfront via customer prepayments or customer-supplied GPUs, meaning no additional capital raises are expected for this specific purpose. However, to fuel its broader expansion, Oracle did raise $30 billion via investment-grade bonds and convertible preferred stock, an offering that saw a record order book and was significantly oversubscribed. Furthermore, the company has announced a $50 billion capital expenditure plan for fiscal year 2026 to support its global infrastructure build-out. This level of investment and the massive backlog provide incredible visibility into Oracle's future revenue and confirm its status as a primary infrastructure provider for the AI era. Oracle's technology strategy is now centered entirely around AI, and it is paying off in every part of the organization. The demand for cloud computing for AI training and inferencing continues to grow faster than supply, and Oracle's largest consumers have strengthened their financial positions substantially to secure this capacity. Beyond providing infrastructure, Oracle is also using AI internally to transform its own operations. AI code generation technology is enabling the company to build more software in less time with fewer people. This has allowed Oracle to restructure its development teams into smaller, more agile, and more productive groups. This efficiency is also being passed on to customers through the expansion of SaaS applications for more industries at a lower cost. AI code generation makes Oracle's application suites more competitive and more profitable. Management noted that this Q3 was the first quarter in over 15 years where organic total revenue and non-GAAP EPS both grew at 20% or more in USD simultaneously. This milestone highlights the profound impact that AI is having on Oracle's fundamental growth profile and its long-term competitive positioning. Oracle's growth is balanced and broad-based across all major geographic regions. The Americas continue to be the largest and strongest market, contributing $11.4 billion in revenue, which represents a significant 26% increase year over year. This reflects the intense adoption of cloud and AI technologies by North American enterprises. The EMEA region also showed strong performance, with revenue growing 16% to $3.96 billion. Even the Asia-Pacific region, while smaller, contributed $1.87 billion and grew 9%. When we compare these results to the same quarter last year, the upward shift in every region is clear. The Americas grew from $9 billion to over $11 billion, EMEA grew from $3 billion to nearly $4 billion, and Asia-Pacific maintained its steady growth. This geographic diversity provides Oracle with a stable foundation and reduces its dependence on any single market. It also shows that the demand for Oracle's cloud and AI solutions is a global phenomenon as organizations around the world look to modernize their infrastructure and leverage the power of artificial intelligence to drive efficiency and innovation. Oracle's balance sheet and cash flow generation remain exceptionally strong, providing the capital necessary for its aggressive expansion. Operating cash flow for the trailing 12 months reached $23.5 billion, a 13% increase year over year. The company's liquidity position has also improved significantly, with cash and equivalents standing at $38.5 billion, up from just $10.8 billion in May of 2025. This increase is largely due to the successful capital raises mentioned earlier. Total assets have also grown by $77 billion since May 2025, reaching a total of $245 billion. Short-term deferred revenue, which represents a strong pipeline of upcoming work, stands at $9.9 billion. On the spending side, capital expenditures for the first 9 months of the year reached $39.2 billion, compared to just $12.1 billion in the prior year. This massive increase in CapEx is directed toward building out the data center capacity needed to meet the unprecedented demand for AI infrastructure. With a full-year FY2026 CapEx guidance of $50 billion, Oracle is making a bold bet on the future of AI, backed by a robust financial foundation and strong cash generation from its core operations. Looking ahead, management's guidance is incredibly bullish and suggests that the best is still to come. For the fourth quarter of fiscal year 2026, Oracle expects total revenue growth of 19 to 21% and cloud revenue growth of 46 to 50%. Non-GAAP EPS is projected to fall between $1.96 and $2. For the full fiscal year 2026, the company is targeting $67 billion in revenue with $50 billion in capital expenditure. However, the biggest news is the raised guidance for fiscal year 2027, where Oracle is now targeting $90 billion in revenue. This significant upward revision reflects the company's high confidence in the sustained demand for its AI cloud services. In addition to this growth, Oracle remains committed to returning value to shareholders, announcing a quarterly dividend of 50 cents per share, with a record date of April 9th and a payment date of April 24th. This combination of hypergrowth guidance, massive capital investment, and consistent dividends makes for a powerful investment thesis. Oracle is clearly positioning itself as the infrastructure backbone of the AI economy for years to come. In summary, Oracle's Q3 FY 2026 report reveals 5 key takeaways that every investor should understand. First, this was an exceptional quarter, marking the first time in over 15 years that revenue and EPS both grew at 20% or more simultaneously. Second, we are seeing cloud hypergrowth, with IaaS revenue surging 84% and the cloud now representing over half of total revenue. Third, the massive $553 billion RPO indicates a massive backlog of future business, largely driven by long-term AI contracts. Fourth, management's confidence is so high that they have raised their FY 2027 revenue target to $90 billion. And finally, AI is now the core driver of the company, both as a product for customers and as a tool for internal efficiency and software development. The momentum favors the bulls, as Oracle's unique combination of high-performance cloud infrastructure and industry-leading software positions it perfectly to capture the AI opportunity. What's your verdict on Oracle after these stunning results? Does the $90 billion target change your long-term outlook? Let us know in the comments below, and don't forget to like and subscribe for more in-depth financial analysis. That wraps up our analysis of Oracle's Q3 results. The company is clearly firing on all cylinders, transforming itself into an AI powerhouse with incredible speed and efficiency. Whether you're looking at the cloud growth, the massive backlog, or the ambitious forward guidance, the story is one of unprecedented momentum. Thank you so much for watching. If you found this breakdown helpful, please give it a thumbs up and subscribe so you never miss an earnings deep dive. We'll see you in the next video. Happy investing